Thank you for joining me today. Why is my camera not in the right place, or I'm not in the right place? Okay. So today, as most of you know, I have a special speaker, one of the earliest names I've heard when I started my career in the tech space, which is Mr. Blumberg, that I'm very excited to have with us here today. So a couple of words about David and what he's been doing in the tech world. So David is the founder and managing partner of Blumberg Capital. David is an authority on early stage investing with decades of experience. He founded Blumberg Capital in the early 1990s and launched its first venture-backed fund in 2001. Prior to Blumberg Capital, David managed international investments with the Bronfman family office. I believe they spoke at our events at different times. Adler & Co., Apex Partners, and at T. Rowe Price. He also launched business development for Checkpoint Software Technologies as one of its top 4 executives. As you may know, Checkpoint is one of Israel's biggest exits, oh, not exits, but companies that came out of Israel. And I believe, what's his name? Gil, I forgot his name. Anyway, Checkpoint came from, I believe, Unit 8200 in the Israeli army, which is something we talked about many times at our sessions. So it's Israel's probably most secret and sought after group in the Israeli army. Gil Shweid, I had a blackout. And I tried to do 2 things at the same time, which is to talk to you and Google Checkpoint. And apparently I cannot seem to understand that most men, or at least I, cannot do 2 things at the same time. Anyway, David earned his AB in government cum laude from Harvard University and his MBA from the Stanford Graduate School of Business and INSEAD. Speaking of INSEAD, they are partners, they are academia partner at a UAE conference. Where was I? David speaks French, is a proficient in Hebrew and Spanish. I didn't know, David, you speak Hebrew actually, so shalom. David serves on the board. Wow, even the accent is perfect. David serves on the boards of Angel Health, Credorex, Double Verify, EarnUp, EasyKnock, Insights. I don't know who can pronounce that, but I think I just did. Jasby, Langio, Shift, Slink.io. Is that blockchain related, the IO, or not really? So
it's supply chain resilience.
Got it. Supply Pike, Trillu, and Wonder. So I was just saying, David, your name when I started my career many years ago was always there as a very big name in the tech world. So I'm very honored to have you here with us today. And I believe you are talking to us from sunny Miami.
Yes, thank you very much, Denny. It's a pleasure to be with you. And yes, we've moved to Miami recently and are just loving it. It's got a Tel Aviv vibe, plus New York and LA all mixed together. And now Silicon Valley is moving here in droves. So we've got the best of that. Plus, they call Miami the capital of Latin America. And most of my neighbors are industrialists who own major companies all over South America, Central America, and the Caribbean.
Interesting. And how long have you been in Miami?
Just about 2 months.
Oh, wow. Wow. So you plan to stay there now? That's
This is home.
And where is Blumberg headquartered?
Well, we operate internationally. So we have offices in San Francisco, New York, Tel Aviv, and Miami. And there are people even in Minneapolis and Southern California because of the lockdowns. We're really operating on a distributed model. our catchment basin for deal flow is North America and Israel primarily. And then we have some aspects of deal flow that come from Europe. And so we're really pretty international. We've operated following the clock, following the sun for years. So the lockdowns and the work from home was not completely alien to us. We were able to adjust to that fairly quickly. We're a virtual enterprise, and we've even written some blogs about the dawn of the virtual enterprise, that this is a new world of digitization, of virtualization, of decentralization. And our investment thesis, it really ties right into that.
No, I have to ask you a question just before we get going here, because the reason I moved to New York is not the weather. Okay, I'm sitting here next to a heater while you're sitting enjoying the sun and all. The reason was I thought, as a group that deals with people from all around the world, there's only one place in the universe, and probably right now I'm going to lose a lot of families that never going to join my events again. But there's only one place on the planet where everybody go to at some point. Right? It's not the West Coast, it's not Miami, it's not London, it's not Chicago, it's one place, New York. Everybody at some point goes through New York, and I thought that's the place to be. Do you think that will change? Or is changing already?
Well, I'll begin with, I love New York. I think New York is an amazing, unique place. Like London in the 19th century, New York is in the 20th century, really sort of the capital of the world. I get that, and I salute it. So I salute it. On the other hand, I think one of the lessons from this COVID pandemic and from recent modern history is that single point of failure, single centralization is a dangerous and fragile model to build society on. And so I think a more distributed, more decentralized, more flexible, more resilient model, much as the internet is designed to withstand concerted attacks from any single entry point, is a better model for society. So it's not good to have everything concentrated either in New York or Silicon Valley or London or Tokyo. It's good to have things start to spread out a bit and have clusters of excellence, clusters of technology hubs where people can be in a different bubble and they can move from place to place. If everyone is in the same bubble, it starts to become groupthink. And I think what we need is more diversity of thought, more intellectual freedom, more creativity, rather than everybody thinking the same way.
Interesting. So I will definitely think about what you said when I'm thinking about the prices of houses here and the taxation level. So to get started, let's. I gave a short introduction. If you can introduce yourself a little and give us an overview of what you guys do.
Sure. So my personal story is kind of a classic American story. I grew up in a nice middle-class family in Fresno, California, a small sort of agricultural town at the time, the 1960s and 70s. And I was fortunate enough to go, I went to the public high school, but I went up to Harvard College. I studied government international relations and economics. I thought that government solves the big problems, and that's where I should be working, because I was very idealistic. I really like to make the world better. I feel from the time you're born till the time you die, you have a job, and that's to help improve the state of the world the way you found it and leave it better. So then I worked in Washington a few summers, and I, at the same time, was working at Harvard as an entrepreneur. I started a company there called Harvard Distribution Services. And I was getting positive feedback from the entrepreneurial experience, and I was getting sort of negative vibes from my experience in Washington, finding it somewhat inefficient, ineffective, and a little bit corrupt. And I switched to the entrepreneurial side because I thought, gee, the real change agents in the world are scientists with entrepreneurs. And when those two get together and they bring new products and services to the world, that's when poor people move into middle class people move up, the world gets better, death rates go down, infant mortality reduces. So I like the idea of progress for the human race. And I like the idea of how do we do that? Well, the capitalist model spreads good news and good products and services around faster than anything I've ever seen. So that was my epiphany. So I went to business school at Stanford after graduating Harvard, with a pause in between that was very instrumental in my life. I worked for a place called T. Rowe Price. They're one of the large mutual fund managers, and they were known for growth stock investing style of investments. That was important because I like long-term thinking. I'm not a short-term trader. Blumberg Capital is a very long-term, early-stage investor. We start at the beginning of the life cycle with the entrepreneurs just really forming their ideas, and we work with them all the way through, often to the exit. So the idea for T. Rowe Price was to evaluate new industries that were in growth mode and find 10 companies in the field and find out which 3 were going to be the stars and which others would not be so successful. And then try and have T. Rowe invest in those successful 3. Because you don't know exactly which of the 3 are going to be the best. You pick a portfolio. So in like manner, Blumberg Capital looks for early stage entrepreneurs solving hard problems in large markets with proprietary technology that is sustainable. And that recipe allows us to back great companies. Now, not with 100% success. We make mistakes. Sometimes entrepreneurs start on one path and they need to pivot because of market changes or regulatory changes or technological leapfrogging by a competitor. So we understand that not everything is successful, but we've had enough successes that we think we're on the right track. And so basically then after T. Rowe Price and Stanford Business School, I really jumped straight into venture capital. I was mentored by some of the great investors of our time, a gentleman named Frederick Adler, who really deserves the title of the grandfather of Israeli venture capital. At the time, he was the only American VC of note and stature that was really willing to actively invest in Israel. And he was there for the great companies like Elron, Elsyn, Cytex, Daisy, back in the day, 20, 30 years ago, 30, 40 years ago, when he started. That was the first generation of Israeli tech. And he was also successful in US, Canadian, and European investments. So that was Fred Adler, was there for several years. Was also with Alan Patrikoff's group, Apax. Alan Patrikoff still remains a friend to this day. Great mentor, amazing investor. And then I worked for the family office of the Bronfman family in Montreal. Very international family, Canada, US, Israel, very famous for their investments all over there and in Europe. And so I did a number of investments for them, and then started Blumberg Capital in the early 90s. Without a fund, we didn't have a fund, so we were really going deal by deal. We did what we call a pledge fund, where we just would find the deal and then find the investors. And we did 9 investments in that period. 4 of them were IPOs, 4 were excellent success sales, and 1 was a failure. So it was a great record. On the basis of that, Blumberg Capital was able to raise the first fund in 2001. So now we're investing out of Fund 5, and we have about 70 companies in our portfolio. We specialize in early stage investing, so we like to lead or co-lead the Series Seed or A rounds. We tend to invest again in the North America, Europe, Israel triangle. I told you where our offices are, and our focus in the domains is really business to business primarily, although we're open-minded. And I'm going to put up a slide, if I might, about our investment thesis. Let's see, how do I share this screen? Do you see that there? No, probably not. Okay, I've got to share screen. And this one.
Yeah.
You see that now?
Perfect.
You see that? Okay. So basically, we're investing in these early stage companies that are helping automate the white collar economy. And if I can wax historical for about a minute, if we look at the big game changers of productivity from the 19th century, we'd have to say, well, long distance transportation was revolutionized with the steam engine because of steamships and railroads. And the agricultural economy was revolutionized because of the tractor, also employing engines and power. So that revolutionized the agricultural and long distance transportation. In the 20th century, we saw factories revolutionize what was formerly guild craft work for manufacturing of products, chairs, tables, bricks, whatever you made, used to be made by hand, then became made by factory and automation, today robots. And in the 21st century, we believe that the real area for productivity improvement is going to be automating in the white collar economy, taking out the mundane tasks, the boring, the error prone, and allowing humans to do more creative, high value jobs, and letting the machines take care of the basics. So it's really a combination of big data now from sensors and social media and proliferating sources, plus artificial intelligence algorithms that can, at scale, take that raw data and transform it into useful knowledge. And so we're able to, for example, mine historical data that would have been overwhelming for manual analysis and take it and use predictive analytics to inform our decisions for business leaders going forward. it's a very exciting time. And at Blumberg Capital, what we're seeing is the ability to go vertical by vertical and take that thesis of AI plus big data and improve and inject an efficiency across many domains. So you'll see in our portfolio, we started really with fintech, financial services technology, adding predictive analytics, AI, machine learning for underwriting, for risk analysis, etc. And it's gone into supply chain and transportation mobility. It's gone into enterprise software, classical office work. It's gone into healthcare very actively recently, especially because of the pandemic, and we'll talk about that more. And it's just really across every domain, this vertical, the horizontal technology of AI, big data, works in almost every vertical that we've found.
Are you showing another slide?
I can go to the next slide.
No, I have another question.
This would show, this shows really our portfolio mix, if you would like. And it sort of shows the fintech was the largest portfolio, number of companies that maybe the audience will recognize. Some I'm on the board of, others my brilliant colleagues are on the board of. And then we have data and analytics and infrastructure, enterprise software, supply chain, healthcare, cybersecurity, and a fraction of others. So that's really sort of the mix of our portfolio. And we can certainly talk about that if you'd like. Maybe I should introduce our team when I do that. There's sort of 4 or 5 of us on the senior level. Each of them have outstanding backgrounds. We don't really have time to go into everything, but everybody has a common point. Everybody has worked in industry. They all have operating backgrounds. They all have international experiences. Many speak different languages. So we keep a very open-minded approach. We don't feel that we are super domain centric. We're pretty open-minded. We let the entrepreneurs bring the great ideas to us, and we add value where we can. Let me go on to the next slide and show another group of advisors. We found enormous value by bringing in people with a lot of experience. Stanton Green and another fellow, Adrian Vansel, who's not pictured here, both prior CEOs of our portfolio company successes, and they've come to work with us. Roy Laurence, former CTO at Reuters, and before that, Capital One. Juan Pujadas on the board of Wells Fargo Bank today, and was the vice chairman of PwC for many years. Pat Steele was the CIO at Delta Dental, at Albertsons. He's now on the board of directors of Common Spirit, the 4th largest healthcare concern in the US. So a lot of gray hair, if I may say so, and experience to help our companies and our young entrepreneurs as they move forward into the market with connections, with advice, with experience, with a shoulder to lean on, all that kind of stuff. And then let's see what's next. And maybe a little bit about how we add value to our portfolio. We have sort of 4 quadrants. Adrian Vansel, who came recently from Google, heads up this area of business resources. And he's really helping do business development for our portfolio companies. So helping them find connectivity to large Fortune 5,000 customers, distributors, et cetera, and it's a whole series of things that we do there. Then ideation mostly is run out of Israel, but we're open to entrepreneurs from anywhere. And that's where we help entrepreneurs that have not really yet crystallized the full business plan and raised money. They're in the process. It's a work in progress, and we join in, roll up our sleeves, and help them create. We've done a couple of those. Mitigate and Hunters are examples that are very successful so far, where we were very active and they incubated in our offices, in this case in Tel Aviv. CIO Council is quite astonishing, and I think I have a slide on that right here. Yeah, this CIO Council is a group that we've gathered over the last 20 years or so. It is really a brilliant organizational gathering of these CIOs, CISOs, so CIO is Chief Information Officer, CISO Chief Information Security Officer, sometimes they're even Chief Marketing Officers and other executives. And they come together about 4 times a year on each coast, virtually, and we get them to hear the pitches of our startup companies in our portfolio. Sometimes we pitch them companies we're considering to invest in, and they give us great feedback, and then they open doors, and many of them become beta sites, design partners, early customers, and just give great value-added advice. Some of them go on to become advisors for the advisory board of these customers, these companies, and then they often even go on the boards or invest in the companies as well. So it's a holistic addition where startup meets Fortune 5000 and let them make some music together. You know? This is Rap Tracker. Let me just go back here. And then very important point to also mention is technical recruiting. There's a young woman in Tel Aviv who had a decade of experience or more at the 8200 unit, the most famous intelligence unit of the Israeli military. It's equivalent essentially to the US NSA, and I forget what it is, MI6 or MI7 in the UK. I've forgotten the acronym, or the GR something. Anyway, it's the area that really does superb software development and analytical work. And so she was in charge of HR. So she knows the many thousands of people who cycle through that organization. And as they come out, we're able to recruit them for our portfolio companies and then do reference checks. And it's just been amazingly productive. So we help our companies at no cost to them through Sharona's efforts. So that's our sort of 4-quadrant biz dev help that we like to offer for our portfolio companies. Is that good to pause?
Yeah, no, it's great. It's great. I mean, you answered several of my questions, but one you haven't that I want to ask, and coming out of Israel, it's my favorite question. Why is Israel important?
Yes, I think it's a very good question. Let me go back to, I think there's a slide on this. I need a slide. No.
By the way, I will say, while you get it ready, that when we started to get out of Israel to the world many years ago, the fact we come out of startup nation, so to speak,
yes,
we thought was one of our biggest edges as a family, as a group that goes to the family office space, because families love technology. And that's what brought us to open each and every one of our conferences with technology session and do a sub-conference with the world's leading legal firms in London, in New York, in Toronto, just focusing on technology. So
I apologize. I agree with you. We don't have the right slide that I picked the wrong slide deck, but this shows a number of these companies are from Israel. And what's interesting is that many of these Israeli companies start in Israel, but they quickly become international. They quickly begin selling internationally. And the first major target market is most likely going to be the US. So that's where our value add mostly helps. I think that's why many entrepreneurs choose Blumberg Capital as their lead investor in the early rounds, is because they want help in the US, where so many Fortune 500 customers are based, where their second round of financing will often originate, where often distribution partnerships and strategic alliances are forged, and often where the exit happens later on. So the fact that we have people in Miami, New York, San Francisco is really very, very, very helpful to the entrepreneurs, whether they're a startup from Silicon Valley or from Miami or from the East Coast or from Tel Aviv or London. Everybody wants connectivity into the US market. So the Israeli brain power is remarkable. Again, that training through the 8200 and the military in general is very helpful. It helps an entrepreneur be focused, helps an entrepreneur be disciplined, helps an entrepreneur find a cadre, a team that they trust. And you need trust in a startup, so that's very important. And then even the technical skills that are honed and are rewarded in the military, especially those intelligence services, do come to play, and the leadership skills that are trained and imbued there we've found them very, very positive. Same is true, frankly, for those people who come out of top levels of the US military, British, Australian, Canadian. All of these are great training grounds for entrepreneurs.
Interesting. And from what I've been hearing at some point, I mean, when you try to compare Silicon Valley and Israel, the Israelis, would you say that their biggest problem is when it comes to the marketing stage, being, organized and getting to the larger market, and that's when you come in? I mean, I'm just asking as one that knows both areas, both Silicon Valley and Israel, how you see the differences there.
Yeah, I think most Israeli companies are very technology driven historically. We're starting to see a new renaissance or a new growth in even B2C companies from Israel. You've seen a number of successful companies that have done B2C type or B2SMB type models. And so I think that's great. I mean, there's no reason that Israelis should inherently be bad at marketing. For a variety of reasons, they weren't great. I think one of the biggest reasons was obviously the history of, frankly, a government-controlled sort of protectionist economic system. The Israeli economy in the 1950s and 60s and 70s was structured such that very, very high tariff barriers for foreign competitors. So there's often only one or two brands that were local Israeli producers. And so there was no need for marketing because the consumer didn't have much choice. And so as that changed in the reforms of the 1980s and 90s, it was a bipartisan Israeli economic reform. They opened up the economy to competition, and competition brought in new brands, and new brands brought in the need for marketing and competition. And that has spurred, I think, a better understanding of consumer behavior, consumer choice theory, and all of that. So Israel will find its footing in consumer products as well. But for now, the great training that the military brings, the great sort of learning ethos of the Israeli and Jewish people for mathematics and science really pays off in the technologists that we find there. But again, I don't want to say that it's only there. There are brilliant people, brilliant technologists from India, from China, from Japan, from Mexico, Argentina. There are so many brilliant people. Our job is to try and focus and help them reach a market in a relatively short period of time. They need a time window of a few years to hit product market fit. And so that's why us being where the early adopter customers tend to congregate is most important for our entrepreneurs.
And just quickly, before we jump to the bottom line here of your track record that I want to talk about, I have a question from someone here that is just about what you just spoke about. He says, Israel has strength in security, including cybersecurity. Which portion of your portfolio is focused on these areas? Yes,
we have a number of very exciting cybersecurity companies. It's about 9% of our portfolio. I can pick on BioCatch as one, Medigate, Insights is three just on this page. Let's just start with BioCatch. Everybody knows that a password and a user ID are the typical entry points for authentication of an entry to an application. However, the problem with that is that even with the most complicated type of password and a separate factor of maybe a thumbprint or an iris scan, that's a one-time only security check. And the problem today is that through communications networks, those passwords and credentials can be sniffed off of the line, off of the wire, off of the air. And so then the bad guys can operate as if they are you with your credentials. And so BioCatch says, wait a minute, there's a better way. And what they do is take about 500 sensor data points from the sensors that come from the phone or your local device, and they can see that it's Denny Chared using that device. And if you hand it to your wife or your colleague, the system would know another person is now using that device. Maybe we need to re-authenticate to make sure that this banking transaction can go through. So BioCatch does this in real time. It's being used by many of the big banks around the world. Very, very exciting. And it's very easy to use because there's nothing that the consumer has to do differently. They just go about their business. The machine does everything. It takes care of the signal analysis, the differentiation between you and another user. All of it's done in the background. So no user friction whatsoever. Yeah? Medigate is fascinating because what it does is solve the conundrum that security officers want to protect everything in a network, and hospital officers, according to FDA and other regulations, want to never let a patient die for lack of a machine operating properly. So there's a tension there, because in a typical corporate network, the security officers would be trying to patch any vulnerabilities that are discovered in software. But in a regulatory regime of most hospitals, they need to get permission from the FDA on an annual or every other biennial year cycle. And so many vulnerabilities are left unpatched for a long, long time. So Medigate has come up with sort of a three-layer approach: outside, very secure, buttoned up to external penetrators and hackers; inside, sort of you can call it a sandbox or a loosely coupled connectivity; and then on the inside layer, compatible with FDA regulations and the old protocols. So that's an example, and I think that you could say Deep Instinct and Insights are both using AI, artificial intelligence, in very interesting ways in cybersecurity. So on the one hand, we love cybersecurity because it's a cat and mouse game. There's always a new problem to solve. The other hand, it's often an area of niches, of smaller market TAM, the total available market size. And so we need to be very careful there and not invest in too many cybersecurity companies, but try and find those that are in white spaces, in areas that are not too competitive and can grow very large.
Now, how are your funds doing? Let's talk about that, your track record, and if you can share with us.
Sure. Let me put up this. This shows some of the returns. And of course, these are work in progress, and modesty and SEC rules don't let us talk about the future, but this is historical. I'm smiling because things are getting better and better, for our companies as we speak. It's been a weird irony that during this pandemic, when so many people lost jobs and it was tough, and we were nervous at the beginning. We thought our portfolio will have a lot of difficulty selling. If we look back for the year 2020, most of our companies grew very rapidly. It was a very good year of growth. And so I've actually come up with a new acronym for COVID. Instead of the coronavirus, all that, we say COVID stands for Catalyst of Virtualization and Increased Decentralization. So COVID, Catalyst of Virtualization and Increased Decentralization. And that's what happened. A lot of our solutions were digital. So in telemedicine, our company started really succeeding well. In supply chain resilience and management, there were more and more needs for a redistributed and a rejiggered supply chain with not a single point of failure. So there was a lot of movement there, and new need for new software with end-to-end visibility. So our companies like Slink and Intelage are in those areas, and SupplyPike and others. So that's an exciting area. But going now to track record, you can see that we try and talk about things in terms of return on capital. So TVPI is a measure of that total value per invested capital. And this is dollars returned or at value. Some of it's realized, some of it is still in the portfolio and eventually will be returned in cash or shares as those companies exit. The size of our funds have grown over time, but we still have stuck with the early stage thesis. Seed and A round is our entry. We increasingly like to follow on and go deeper into the rounds and invest more. And then we can give it to an example. These are good examples. I apologize, I put up the wrong slides, but if you look at companies like Braze, we're looking at 60, 70 type multiple returns on these companies. Those three in particular, Braze, DoubleVerify, Nutanix, I think are each 60 to 70 to maybe up to 100 times return on our invested dollars, which is a good return for anything. Then we have other great companies. The reason these 8 are all on this page is because they're all now worth over $1 billion according to their market valuations by outside investors coming in to invest. And we're very proud we were the first, or at least latest second institutional investor in all of these companies. Many of them had no revenue at all when they started. And now all of them are worth at least $1 billion, some up to, you could argue, 7, 8, 9, 10 billion. So pretty exciting. And the entrepreneurs have done incredible jobs. It's humbling to watch how fast they've grown and what kind of great products they've brought to the market. Maybe, I don't know, take an example if you like.
Please.
Okay, let's see. I talked about BioCatch a bit. Well, Catapult just had an IPO, so that's a pretty exciting one. This is a company that was formerly known as Cognical, and they occupy a niche in the world that many people will know if you know the company called Affirm, A-F-F-I-R-M. Affirm is a point of sale financing option for people without credit cards that want to buy a large object online, for example, a TV set, a couch, a table, some big piece of furniture or computer. And so they would come and go to the store like Wayfair or Samsung, Lenovo, Casper, Purple, and buy. But if you're in the subprime category, if your credit is not so great, then Catapult is the solution. And so the company has just been on a growth rate that's quite astonishing. And they recently were able to go public under the symbol, I think it's FSRV. And it's the growth rate of the company and its profit is really outstanding. We're so proud of the management. They've grown it beautifully over time. They've reduced their own cost of capital. They've kept their loss ratio and their delinquency rate very modest. They tightened their credit score box in terms of the underwriting function at the outset of this crisis. and they really have not suffered, and they've helped a lot of people obtain goods that they couldn't otherwise afford. So that's an exciting one. Then if you take one, say Nutanix, which we've completely exited this far, I think I have a slide on that.
Mm-hmm.
No, I didn't. I took the wrong slide set. In any case, Nutanix, we met 3 entrepreneurs about 10 years ago, now 12 years ago. They were going to solve the problem of digital storage, because digital storage demand was growing exponentially. Customers couldn't afford to spend an exponential growth pattern. And so a new paradigm was needed in terms of the ratio between hardware expense and software. And what the Nutanix guys said is that they had learned at Google to buy commodity hardware and put smart software on top and collapse the stack essentially from 3 layers to 2, getting rid of a lot of the unnecessary expense from rigid hardware infrastructure, and instead make it more flexible, make it hybrid, so you can go cloud or on-premise, multi-cloud, so you're not dependent on any one particular vendor. And so this Nutanix is now selling about $1.4 billion or 5 every year in the market. They have 6,000 employees. They're worth $6 or $7 billion. They've made a lot of people very, very happy in terms of the customer base. They sell to most all branches of the military and the Five Eyes. They sell to hospitals, banks, enterprises, and they're helping them essentially, again, do more with less spending on digital storage and make it more flexible. So that's all good. I'll pause and let you ask another question.
Actually, before I go to my questions, another question from one of our attendees. Can you tell us more about what you mean by early stage investment? Is it a pre-series A or later?
Yeah, we like to say that nothing is too early for us to look at. Again, the Nutanix founders, the 3 of them came in with no code. They didn't have, they might have started a little bit writing some code, but they didn't show us code. They didn't, they had a PowerPoint presentation, and they knew what they wanted to do. They were very informed about the market. They were inside participants from Google, from Oracle, from Astrodata. They knew, they were very well qualified. And we knew the demand, so we understood that. We put them together with our CIO council, and we asked the CIO council, if they build this, would you buy it? And the CIO council members, a number of them said, I'll put my hand up, I will be a beta customer. And that was a law firm called Weil Gotshal in New York. And they became full Nutanix across door to door later on before the IPO. So you start to see these things that we start off with one meeting, and then a question, and then some brave partnerships that become early adopters, and then it can really become a huge company later on. So that's exciting. We've seen that multiple times. We saw it with Double Verify, if I can go to that company. That's another one where it was an Israeli entrepreneur, pioneered an idea of verification of the display media plan for online advertisers. Now, before he was there was no way to know where your ads were appearing. You might buy a media plan to advertise only domestic US websites, and yet the ads were appearing in many other countries. That was a waste of money. And there were sometimes other problems, adjacency to inappropriate content. You had big brands appearing on neo-Nazi sites or other hate groups. And that was not good for the brand. So Double Verify pioneered the idea of blocking those inappropriate connections and making the media plan adhered to by the publishers and the ad networks. And so that's what Double Verify has done. They've grown exponentially since then. I think when we were investing before they had any customers. We helped them get some of their first customers by going to trade shows, walking them into big companies, to the CMO, walking them into ad agencies. And we really worked as a team in those early days. The company has then since gone on, and we actually did an exit partway along because we'd invested $8 million over time from the first initiation. And first initial investment about $1.5 million, and then we kept following on. Put in about $1 million. At some point, the syndicate wanted to sell the company. And we weren't so keen on that because we said the company's profitable, it's growing fast, it has great management, it's great stable customers, let's just grow further. And so they wanted to sell, so they did. And we noted that they were selling to a private equity group. We said, oh, if that's possible, then we would like to roll over some of our holdings. So we sent home about $25 million to our LPs, and we rolled 40 million forward, and that 40 now we think is going to be worth many more times that because the company has continued to grow so successfully. So we like to stick with companies for the long term. And as your questioner asked, nothing is too early. We could really come with an idea. And even if we don't invest right then, we'll try and give you feedback and help you along the way with maybe some helpful hints.
Now, sector-wise, what would you say are the sectors you're most interested in? Which sectors are you avoiding?
Yes, we're not really avoiding. We like things that are capital efficient. And I'm showing up some Fund 5, about 10 companies we've invested in. And some of these, those early companies, a lot of them are in the area of healthcare tech and in supply chain resilience. We like the area of fintech still very, very much. Cybersecurity, we like a lot as well. We'd go back to this area that shows all of our, this one. This shows the main areas we invest in, but we're open-minded. Like, we're very interested in the area of space tech and of maybe another area, gerontology, the age of aging, that world, anti-senescence. Those are all new areas for us. The area of drones. We haven't got investments in these areas yet. Blockchain and that realm also. Crypto and not crypto, yes, blockchain, but I was gonna say quantum computing. These are all new areas. We don't have them on the page yet, but they're areas that we think are very open for the future. So we take our lead from the entrepreneurs. If you, Mr. or Mrs. Entrepreneur, can come to us and show us a great opportunity, we're willing to dive in, and we will gather the resources and the network to help in that realm.
Thank you for laying the ground for me to remind everybody that after we did our blockchain and crypto and DeFi conference 2 weeks ago, we have a second part coming on March 3rd. So then we're talking about, by the way, everything around and NFTs and everything about the regulation, things we didn't talk about before. Now, somebody's asking exactly what I was about to ask you, which is first of all, thank you for sharing this overview, and we have some questions here and your success stories. For those interested in learning more, what's the best way to get in touch with you? And by the way, we will send David, actually Zoom does it automatically. I will send the contact information that you'll give me later on with everybody so they can reach you. But what's the best way to reach you?
I think the best thing to do is I'd encourage people to come to our website, blumbergcapital.com. It has a lot of information. It has how to contact us individually. It has how to look at our portfolio, and you can see what we've actually invested in. You can check in with other companies that we've invested in to check as a reference on how we are to work with. You can check our blogs and our news items that we've posted about what we think about remote working, the dawn of the virtual enterprise. We do fintech surveys, we do cybersecurity surveys, we've done healthcare surveys. So these are areas we're interested in, and we try to publish relevant content. And follow us on Twitter, follow us on LinkedIn. These are all useful ways of finding out more about us. But our offices are open, in Tel Aviv very soon when the lockdown ends. San Francisco office is not quite open. That's waiting for California to open up. But we're generally available on email, and we'd love to engage with entrepreneurs and investors.
Thank you. Now let's, I'll go back to some of the questions that are coming here. What do you mean by capital efficient?
Great question. Historically, we've been an early investor, and we like to own a relatively large chunk of the company from the beginning. So, to take a stake that makes it important to us, and then we really can devote our resources. So we try and obtain something on the order of 15, 20% with our initial investment. So that means we need to get in early because we write checks generally that are between 1 million and then maybe 5 or 6 million on the first check. So that's generally our range historically. And so areas that have been capital efficient have traditionally been areas of software, hardware, or clean tech, or oil and gas, or large retail operations tend to be very capital intensive, and so we've avoided those. B2B also had a history of being very capital intensive for huge marketing campaigns, and so we traditionally work more in the B2B area. So B2C, again, pretty expensive to do advertising. B2B, more focused and rifle shot rather than shotgun. So that's guided us in terms of capital efficiency. However, now we're a bigger fund. I mean, we raise funds that are 200 million plus and invest in about 30 plus companies in each portfolio. So we have follow-on capital that we can bring, and we can also bring a lot of co-investors. Many of our LPs want to co-invest with us. Many LP means limited partner, I should say that, our investors in our funds. Then we also have good relations with most venture capital firms and corporate investors. So we bring those in as well to fill in the rounds.
Let's see what else. What is your due diligence process like?
Yes, we say that we look at 6 areas. They call them the 6 T's, and there's a whole blog on our website about this. But the 6 T's are essentially the theme. Tell us the problem you're solving. Why is it important? Why is it big? Why is it gnarly? And why can you solve it? Who's the team, the T, second T, team that's solving the problem? Why are you qualified? You have the persistence, the grit, the stamina, the intelligence, and the domain knowledge to solve the problem. Then talk about the terrain, that's the market, and show us the competition nature, how you're better, what's the dynamic of the trends of the marketplace? Is there regulatory change, technological change, socio-demographic change? All that's in the terrain. So first we've got theme, the problem, team, the people, terrain, the market. Then we go to say technology. How does it work? What is your secret sauce? Is it protected by patents and other abilities? And how do you sustain that advantage? Then talk about timing of go-to-market. That's the next T. After technology is timing. How do you get to market? Is it a distribution play through channel partners? Is it a direct sale? Is it B2B or B2B2C or some other variant? Is it SaaS model or something more volume metric on transactions? These are all questions about the timing. Are you late to market and need to catch up? Are you early to market and need to educate the market? And then finally, there are the terms. How much money are you seeking? Are there any special structures you're looking for? And how can we find a modus vivendi to work together in an efficient, effective, and ethical manner?
How big a position do you normally take in these investments?
I just answered. We try and obtain about 15 to 20% on first investment.
If you had to pick 3 and only 3 factors that differentiate yourself from the other fund managers, what would you say?
One of them is the way we think about ourselves. We want to be very humble because we think that the model of some venture capitalists tends to be top-down, the marionette model, where they pull the strings of the entrepreneurs. We think of it the NASCAR model, where the entrepreneur drives the race car and we're there to be the pit crew, to bring fans in the stands, that's business development, to help with the gas and the oil changes, that's funding, to help with recruiting the rest of the team, and to help with business development, introductions and so on, and a little bit of coaching because we've been around this track, NASCAR, many times and made mistakes, so we want to help you avoid the mistakes we've made. So I'd say it's those really things that we're trying to distinguish ourselves from in terms of model psychology relationship to the entrepreneur. That's one. Number 2 is our geographic catchment basin. Again, we're really focused on North America and Israel, adding a lot of value in North America and increasingly in Europe and Japan. We are in Asia. We are able to bring these companies out to our trusted partners abroad. And then the area of, I think the third distinguishing area is really 2. Stage, we do early stage only. And the other part is domain. It's mostly a B2B, algorithmically intense portfolio where we're doing a lot to improve productivity of the next generation of software.
Thank you. I see some questions here. If we're gonna have this recorded for those that missed the beginning. So yes, we will. And we will send you all a link to that later on, as well as information about Blumberg Capital's website. So I will buy another maybe 2 minutes to see if we'll have more questions and ask you, David, maybe where we started. I mean, the world is changing like crazy indeed. And you live in a country, in a state that up till now has been referred to as God's waiting room. In the sense, right, that everybody is either like in Seinfeld are those with shorts and usually 65 years old and up. And we always thought of ourselves in New York City, well, it's not that I've been here for ages, but I've been back and forth as a sophisticated city where you see Broadway and art and culture and sophistication and seasons. Seasons is something that we kind of have here. And now something interesting is happening because smart, cutting edge people like yourself are actually leaving. Many left before saying, wait a minute, why am I paying these taxes? Are leaving to Texas, are leaving to Miami. And I think COVID driven them I think many companies lost in a way and have to be decentralized in that sense because some employees just moved. That's it, moved for good because they just changed states and family and everything. So is that really changing that way? I mean, Miami will end up becoming the sophisticated hub, and I asked you that already, but I did manage to earn another question. So I'll let you answer that, and I'll just ask that question last.
I have a lot of thoughts about this topic. Obviously, it motivates me personally as a family member to made this big move. I'm a fourth generation Californian, so it's very hard to leave. But policy has consequences. I think the biggest policies of many of the states people are leaving is high cost of living. It wasn't necessarily my own personal family's issue, but 5 million people left California in the last decade or so. And that was because the various trade-offs, I won't go into details, but have raised the cost of housing dramatically. So for the starter person coming out of university, maybe with a bag of student debts on their shoulder, trying to get an apartment, let alone buy a house or a condo and start a family and maybe put kids into private school because the San Francisco public schools are not very good, is very expensive. So it was really becoming foreboding and impossible for a starter family to make it in these New York metropolitan area, maybe Chicago city center, San Francisco Bay Area, LA. And so people started dispersing. So the decentralization was driven by really just cost factors. Then there's the regulatory overburden, which has its cost aspect, which makes it less attractive for entrepreneurs. Then there's the tax aspect. Then there are other aspects, the forest fires in California and the water shortages and the power shortages. All these things that maybe don't make the press headlines start to make quality of life less. And I'd rather talk frankly about what's pulling people, the pull factors, rather than the negative push factors. So the pull factors are lower cost of housing, better infrastructure, better schools, lower crime rate, a lot of things that are very attractive to most families, better schools, all of that, very, very attractive in places like Texas, Tennessee, Nevada, Utah, Colorado, Wyoming, the whole central part of the US, and Florida. So I think that the interesting thing that I've noticed here in Florida is that the government is very embracing technology. They want us here. They're welcoming. The mayor reached out, the governor reached out. They all want to meet. They want to improve things. How can we make it better? And that's a very nice thing to hear. So it's a welcoming attitude. It's good infrastructure. And frankly, it's a very pleasant place to live. It is so nice. I mean, I go to New York a lot. I love New York, but walking around in slush and ice and snow for 3-4 months of the year, I have palm trees and can swim every day and can go on the boat. It's very, very nice. And then if you want seasons, there's these wonderful things called airplanes, and you can fly during the summer if you want to go to Wyoming or Vermont or off to Israel or France. Most people are very fortunate and can get away when they need to get away. So that's the great thing about living in the 21st century. Our ancestors didn't have these options. We have amazing ability to be flexible with our lives. And so I think the COVID lockdowns, the pandemic lockdowns for about 10, 11 months have taught us that we can work from pretty much anywhere. And that's the big revelation that allowed so many people from New York to move here to Florida, some people from the West Coast, and then even more to move to Texas. I mean, Texas has been the biggest recipient of immigration, not only of individuals, but of major companies. In the last few years, we've had McKesson, Schwab, Palantir go to Colorado, Oracle, and HPE all move from California to other places. Often it was Texas. And so, again, policy has consequences. And I think that freedom is a very attractive attribute for many people as they make their family and corporate choices.
And maybe last question that I'll ask you from my end, but don't you think we're missing something being digitalized by like that? If you don't go to the office, you don't meet people on the way to the restroom, and then suddenly you have an idea and you talk about it, things that would you know, all of that you miss. When I go to a meeting with you, I see your body language. I see you're just with me. You cannot do an email while you talk to me or anything else. I mean, there are other elements here that you're missing. People will work from home, but then the kids would interrupt them and you wouldn't know about it. How do you see that?
It's true. I mean, what you're saying is all valid. It's an aspect, but I think if we take a holistic point of view, if you take it, the fact that people have to live in a very small apartment and they have to commute a long way and they can't put their kids into a good school and it's very expensive to go out to a restaurant, all those things factor against some of the benefits that you're talking about. So it's a trade-off. I grant you that. And I think that world will not be purely virtual going forward. It will be a hybrid model, but it'll be more flexible on the side of working from home or working in a flexible manner or being able to work in a lower cost environment and maybe less crowded offices. I think there's something to be said for that. And so I think the future finds, water finds its own level. I think entrepreneurs and families find their best solutions for themselves without top-down control. And so as we diversify and distribute, like you've talked about with cryptocurrencies and blockchain, it has some benefits. Are there some costs? Yes. Blockchain cryptocurrency has the issue of the blockchain is hard to implement and the cryptocurrency is very speculative or can be and very volatile. On the other hand, it has immutability, it has anonymity, it has positive traits as well. So everything in life has pluses and negatives. And I think this new realm of a hybrid workplace and a distributed living map of the US and other countries is generally going to be better because, here's the main point, it allows for more choices. And people will come out with different choices. You have chosen to stay in New York, although I note in the nice leafy suburbs of Rye, not in Manhattan. And then I have chosen to move from city center San Francisco to palm tree studded waterfront in Miami. So we're each making our own individual family choices. That's good. Let people choose to have their own path. Let's not have structures and top-down people telling them where they have to live.
Thank you, David. It's been very, very interesting. I can tell you that we've seen a lot of interest in this webinar. Many people registered, way more than at our normal webinar. So I really hope to see you again at our future events. I will just tell everybody here that next week I have, speaking of blockchain, interesting company on February 16th, a guy that was one of the top names in the gaming industry. Some of the, I don't remember exactly which company, but I think it was Samsung or one of the main gaming companies, and they are in blockchain now. So they will be showing, they will be talking to us on February 16th, which is next Tuesday, and on next Thursday, speaking of Israel, an Israeli pharmaceutical company, Izun Pharmaceutical, they're going to be talking about enhancing cancer therapy with improved quality of life. And again, we have 2 sessions a week, so I'll update you later on what's going on. And on March 3rd is our second part of checking out what's going on with blockchain. The price of Bitcoin, by the way, that casino, by the way, that the city, I think, gave I think they mentioned $150,000 as the price they see for Bitcoin in the year, is right now at $48,000. It was $20K in early December. Crazy. David, anything else you'd like to add?
Well, just a big thank you to you and the team. I want to thank Blumberg Capital's team. We're all over the world. We're very active. We love to support entrepreneurs. I want to thank the entrepreneurs that make it all possible and the LPs and investors in the group. If anybody wants to talk to us, again, we're open for all comers. I think the future is brighter than the past. We should all be very grateful that our ancestors, did such hard work to make our lives so relatively easy. And not that everything is hunky-dory, pan gloss or anything like that, but we should really be grateful because we live in an age that takes a lot for granted. And I think a lot of our grandparents would give their eye teeth to change places with us. So I just want us to remember that, be grateful, be humble, and the future is going to be bright. And so we want to help you make your own reality better than it is now.
Great, David. Thank you so much. Thank you all for being with us today, and we'll see you next week. Enjoy your weekend, everybody. Stay safe. Bye-bye.